Let me take you through the basics of this course, then we'll start. Okay, these are 8 chapters you can see. Am I audible?
Yes.
Sir. Right, come. So these are 8 chapters and 100 multiple questions. 4 choices, every question 4 choice. You have to score 100 out of, 70 out of 100. So basically 70% is the pass marks. Okay. Right. And these are the weightages. Chapter 1, 4 marks, 5 marks, 14 marks. These are your 100 marks. Right? So you have 2 hours of exam, 100 multiple questions, no negative marking, and recommended study time about 150 to 200 hours. Right? We will give out about 40 hours of training, and you have to study about 150 hours you have to study, and possibly 3 months could be the right time. Every day, if you put 2 hours a day every day, so 3 months would be enough. Exam can be taken any time of the year. Centers are in Dubai, Abu Dhabi, and result you will get same time. And 8 CPD hours also you will get once you clear the exam. Please come. What's your name? Deepak. Deepak, welcome. Come. Right? So what are we giving? We are giving a hard copy of the book. You would have got it, right? Yes. 25 mock test, LMS access, exam booking assistance, and 3 batches, 6 months. So you are with us for consecutive 3 batches. So 6 months is enough time to clear the exam, right? You pay only once, but you are with us for 6 months. Anytime you can join. We are having 3 batches in 6 months time. So 3 batches you can join. Right? So how to pass the exam? Attend the sessions regularly. Whether you are coming here or you are joining online, make sure that you attend. Even though you don't attend, at least review the records later on. Before the class, please go through the materials provided. Let's say on Monday, we will have chapter number 2. If you go through, just familiarize yourself about the materials, it could be better. During the sessions, please be attentive and ask questions. I'm asking, hey, Muhammad, can you tell? Hey, Gaurav, can you tell? Anand, can you tell? And you are in mute. You have to speak up. And you should keep a notebook and pen and calculator sometimes to write something. After the session, please review the lecture and read the materials. Submit the mock test. We have a mock test for every chapter, like, about 25 mock tests we have. And you have to practice them. You try to get 85, 90 in every mock test, right? Internal mock test, you don't have to, be scared whether I will pass or fail, right? Our internal mock test, you can attempt as many times as possible.
So this,
Yeah, please.
so this mock test you will be giving us after every chapter. You will send
Yes,
us link
right.
in that group.
Yes. So you already have the credentials
Portal, okay.
portal. From that portal, you can get the links. Post your doubts in WhatsApp group that will be created. Already would have been added. Total time you need to put is, that's okay. Read the questions carefully and rule out the wrong answers. Take more difficult questions later on in the exam. Right? We do the same thing. Out of 4 choices, you will find two choices are irrelevant. You knock them out. So remaining with 2 choices. Think little bit and you can get the answer. Okay. We also provide all these courses, right? Anytime anyone wants or your friends, they want any of the courses, you can approach us. So this is my name, Aditya Sahu. I'll be your faculty throughout your courses. So let's work together. Okay, any question on this? Yes. Any question on this?
Yeah, Mr. Aditya, I have two questions. This is Vijay.
Go ahead.
Sir, what is the passing ratio in a first attempt? Is my question number one. And that we have 100 questions. Will there be multiple choice or just we have to select one?
Yeah, you have 4 multiple choices. You will be getting 4 choices. You have to select one. Right? You will have 4 choices. And
Yes.
you will select one out of that.
Okay.
Multiple choices.
Yep.
And there is no negative marking.
Yep. And
Okay, next
passing
question.
ratio in a first attempt?
Whether it's first or second, passing is 70. Out of 100 multiple questions, you have to secure, you have to clear 70. Right? 70 must be correct answers.
So there will be total 100 questions that to pass in first attempt. What is the ratio of it? Depends upon how.
You want to clear exam?
Yeah.
We are there. Forget about others.
Credit card
Right?
was met in 2
We
days.
have-
Have communicated regarding the some teams. I need to follow up with them,
Please mute your mic, madam.
especially.
Just wanted to check with you. My name is Payal. Suppose if we enroll one time in exams, like how many time we can give
Requested you to follow
the
up with the application.
exams, like one attempt, two attempt, how many attempt we can?
See, you can give as many attempts, but that is your exam fees payable to the body. Right? So don't think of multiple attempts.
Mhm.
Think of one attempt, the first attempt I should clear. That should be the target of everyone. So there is no restrictions. You can attempt as many times as you want. Right? I think if you attempt 6 times and you don't clear, they restrict you for 6 months. There is something like that.
Okay. Noted.
All right. Any more question?
Sir, what are CPDRs?
CPDRs means continuous professional development. Once you clear the exam, you get a designation called SCSI. You become a member, right? You can write your name, let's say Anand and SCSI. That's your designation. Okay. Next. Clear?
Good evening. This is Dixon. Just one question. To use the designation ACSI, is there any payment, annual fee or something?
That's a membership, right?
Yes.
To hold membership, you have to pay annual fees of 1,000 dirhams, right?
Okay.
And every year, and you will get lot of advantages. So they will be holding seminars and meetings and all. They will be inviting you. You can attend those seminars. You get networking. You get to know what is new things, right? And to maintain membership, you have to pay some money, right? Any membership. Okay. Yeah.
Okay. Thank you.
That is afterwards. Let us clear the exam, right? So membership will come automatically.
True.
Sir,
Okay.
can you briefly explain about the possibilities of ACCA members in the market?
ACCA members.
Which means like if I'm holding the ACCA designation in all of the market like sectors, what are the possibilities? Like we already having a basic idea, but still if you can explain, it will be beneficial.
I think these courses are for financial services sector. Okay. Those who are working in financial sector, banks, insurance companies, your brokerage companies, investment firms, for them this is good, right? SCCA can work anywhere other in accounting department, right? SCCA does not teach you the wealth management. So this is something completely different, right? Basically, SCCA becomes an accountant. At the end, he goes to a director position, right? But all those wealth management aspects are not there covered in the SCCA. Okay, sir.
Thank
About
you.
the about the job opportunities, we can speak later, no problem. Okay? Yeah, call me, we can talk about it. Yeah. Jennifer. Jennifer? Yeah, hi Maria. Let's start.
Sir, good evening. How are you?
Madam Ji, good, how are you?
I'm okay, sir. I am back now. Thank you so much for allowing me again.
Yes, of course, you are always there with us.
Thank you so much, sir.
Welcome. All right, so let's start. So today we'll talk about chapter 1, the financial services sector. And we will discuss about the purposes and structure of financial services. In this chapter, we will cover the functions of financial services industry, the main institutions and organizations, wealth management, financial planning steps, wealth management providers, and discretionary and non-discretionary portfolio management. Right? So basically, these are the participants. What do you say? Participants. So these companies are engaged in financial services, right? So these companies, they provide financial services in one form or other, right? These are called participants. These are the key terms we are going to discuss, right? Wholesale market, retail market, all those we are going to discuss in this chapter. The purpose and structure of financial services industry. What is financial services? The services provided by finance industry. They can be managing money, credit unions, banking activities, credit card companies, right? Insurance companies, accounting companies, finance companies, right? Stock brokers, investment funds, fund managers, right? These all are called your financial services. Good. The core functions of financial services. Investment management means investors and borrowers are brought together, right? Who is investor? Who is an investor?
So who is investing money?
Who invests the money?
Yeah. So
Investor money.
investor, very good. Investor can be lender
Individual.
and also owner. Lender means you buy bonds, right? Now owner, you buy shares, right? Stocks. What about the banks? Are the banks investors? Suppose your bank is financing you money to your company. Is the bank investor in your company?
Lenders.
No, bank is mere lender. Bank is financier, lender, creditor, right? But if you buy the bonds, you become bond holder. You are investor. If you buy shares, you become owner, investor.
Shareholder.
So bond holders and shareholders are called investors, right? Managing risk, derivatives, insurance companies, their job is to, their product is insurance product. Managing payment systems by SWIFT. Yeah, please come here, this side. Role of financial services sector in the economic growth. Improve the efficiency of financing decisions, better allocation of resources, and economic growth. So financial services sector, right, is a very important for any economy, right? You know that how many banks are there in UAE, maybe 100 banks are there, 100 branches are there. How many employees are employed? So financial sector is contributing to a major portion of the economic activity, right? For the effective running and development of healthy economy and functioning of financial systems, please come. We need credit provision, liquidity provision, risk management, efficient flow of savings and investments, and facilitate accumulation of capital and production of goods and services. So this production means what? Right? Production means whatever being produced in the factory, goods and services. And facilitating, accumulating capital means what? There are investors who invest, right? Let's say you are a depositor. You put money in the bank as deposit, and I want money, I take it. So all those we say flow of capital. So these all are happening in the financial sector. Clear?
What is the liquidity provision?
Yeah. What is called, who can tell me what is called liquidity provision? What is liquidity? Money, right? So providing money, having money for your business, we say providing liquidity, right? Banks are giving loans, banks are providing you liquidity. You can say that, yes. Clear? We'll talk about main institutions and organizations in the financial sector. So who all are employed in the financial industry? Banks can be retail and commercial banks, savings institutions, finance companies, investment banks, also called merchant bank, private banking, pension funds, insurance companies, fund managers, stock brokers, wealth managers, right? Custodians and global custodians. So these are called institutions engaged in financial sector.
Like participants.
Participants, yes. Agents, participants. Financial services sector engaged in wholesale and retail financial market. What is wholesale market? So we say B2C, right? B2B, B2C. B2C means retail. B2B, business, right?
Business.
Your companies, governments, and also import exports are coming in the under wholesale market. Wholesale market includes international banking, equity market, bond markets, forex market, derivatives, we'll discuss in chapter number 3, and fund management, insurance, investment banking. These are coming under wholesale market. Retail market, B2C, they focus on small business, retail banking, insurance, pensions. These are coming under retail market. Investment services can be execution only stock broking. What does it mean? You are a broker, stock broker. I called you, hey, can you buy for me 10,000 shares of MR? What you will do? You will just pass that order to the market. So you are carrying out my instruction. That's called execution only service. You don't give me advice, right? You are just doing what I'm saying you are just executing the orders. Wealth management services, you are managing my wealth. I gave you 20 million dirhams, please manage. That's called wealth management. Private banking, financial planning and services, advices, financial future, mortgages, debts, insurance, pensions, these all coming under investment services.
So
Okay.
private banking, you're managing individual.
Private banking, basically, your clients are high net worth clients. Okay, private banking. We'll discuss one by one. So first is your banks. We are discussing participants in financial services sector, right? First, let us talk about banks and savings institutions. Retail banks, commercial banks, savings institutions, finance companies, challenger banks, P2P, shadow banking, these all are coming under banks and savings institutions. Okay, let's see one by one. Retail and commercial banks. What do? They're engaged in lending and borrowing, asset management. They also having broking services. They also are engaged in selling pension and insurance products. Banks are not only lending and borrowing, they have a lot of other activities also. Owned by shareholders and the governments, they accept deposits from public. They get funding from the shareholders and depositors. Right? So let's say here, bank. Right? We have here share capital, then deposits. So bank is giving loans, credit cards. These are the activities of the bank. Savings institutions specializing in offering saving products to retail customers, offering a range of services similar to those offered by the banks, owned by individual members who deposit to and borrow from the institutions. Let's say we are 20 persons. We can create a group, right? We contribute 100 dirhams every month. Then Anand needs money, he can take from us. So that is how saving institutions work. So who are the members? Individuals are the members. They accept deposits and lend to the customers, to the members. They get funding from the members. Mutual societies transform themselves by being taken over by large banks or transform themselves into banks and get listed in stock exchange, and the process is called demutualization. Right? So we say mutual. That's called your mutual society. So basically, saving institutions also called mutual societies. Mutual means what? Among limited members, we say mutual, right? So once that the society becomes large, right? Either they can go to public or they can be taken over by banks. So they no more become mutual, right? So that's called demutualization. Clear or not? So when, let's say 100 members are there, we say mutual society. Now 1,000 members, 2,000 members. So we can approach to the bank, to the government to give us a facility to go to be listed. We can become a public company, right? And that is called demutualization. It means that mutual society does not remain anymore mutual. Clear?
Then it becomes a proper bank.
It can be merged with the bank, or it can be a new bank also. They can get a license from the bank, from the central bank, or they can be absorbed, taken over by existing bank. Right? So that's called demutualization. Means they are no more mutual. Clear? And buildings and those, there are various names. In Spain, we say cajas, and UK, Australia, and New Zealand, it's called building society. So you have to memorize this. Okay. Next, consumer finance companies. What do? They provide loans to individuals to finance purchase of items such as cars, household equipment. I want to buy a car. I can go to bank or I can go to Dunya Finance. I'll put them capital. Finance companies, correct? Right, finance house, yes. Owned by shareholders, they do not accept deposits. So finance companies cannot accept deposits from public. Why? They are not a bank. They are a finance company. To accept deposits, you must be getting license from central bank. Clear? They get funding from shareholders, banks, and also capital market. It means what? They also can be listed company. Tomorrow, Dunya Finance can be also listed company. Finance companies. One is consumer finance company and second is finance companies. As the name says, consumer finance, yes. Right? Dunya Finance.
Deem Finance,
Deem Finance. Right? Yes, you want to buy some furniture or a car, they can finance you.
So they can lend, but they cannot accept deposits.
No, they can lend only, but they cannot accept deposits. So consumer finance means financing to the individuals for household items or for personal items, credit cards. Now coming finance companies, they finance to business, right? Let's say in Abu Dhabi, Gulf Investment, no finance house. It's a finance house, the Bahraini company, right? They finance to the businesses. So finance companies specialized in providing finances to business. They offer loans and factoring services. What is factoring services? Can someone tell me what is factoring? Factoring means they can buy your receivables, right? Suppose you are a company, you have 10 million dirhams due from your customers and the customers are not paying, right? It's not bad debt. These are all, you can say, doubtful debts, right? Customers are not paying. What to do? You can sell those outstanding to some companies. Let's say Dunya Finance, Alfutan Finance, they can buy out your receivables, right? So they will chase the customers and they will collect money, right? So your doubtful debts, your non-performing assets become converted to cash. So basically, selling of outstanding receivables is called factoring. And the company which is buying those receivables is called factor. So factor is a company which buys out your receivables. Clear?
And the one who is selling, what do you call that? What's it?
That's selling company. But the one which is buying the receivables is called factor. And the transaction is called factoring. Okay.
So they buy at a discounted price.
Of course, yes.
Sir, I have a question.
Yeah.
So you just mentioned this factoring. So it means you also mentioned this Dunya Finance. So Dunya Finance is not coming in consumer finance companies. It is also coming in finance companies as well.
Right. If they're having consumer activity and also business activity, they can be both. Right?
Okay.
So basically, finance companies, they deal with businesses. As an individual, what you buy? You buy a car, you buy some furniture, right? If you have business, you can buy some machineries. So that is coming under finance companies. Clear? So finance companies can buy your receivables. Let's say any bank, they have 10 million dirhams receivables. Or let's say MR company. So this 10 million is not coming, let's say receivables. So this can be sold to the factor. This can be sold to finance company. So you get cash. So your company can continue, right? And the finance company, now your amount was 10 million, possibly they will give you 8 million. So this 2 million is their profit, right? So finance companies, they buy your receivables. They also do not accept deposits because they are not a bank. Banks only can accept deposits. They get funding from the shareholders, banks, and also capital market, same like. So finance company also can be a listed company. Come. Yeah, you can see it. Okay. So this table, any doubt, any question on this table? Anyone would like to have some questions on this table? Yeah, very important. Funding from capital market means what? They can issue shares. They can go to public. They can be a public company. That's called capital market. then they can get from shareholders. Let's say we 20 persons, we also can create a company, finance company. We can put money. We are called shareholders. Clear? And when the company goes to public, the public becomes shareholders. That's called capital market.
So it's share market.
Share market, yes. So they can issue shares.
IPO?
IPO, yes, IPO. Okay? Clear? I think there can be many. All right, let's go further. Okay, so challenger banks, P2P and shadow banking. What is challenger bank? Specialized in areas underserved by big banks. Means what? I want 10,000 dirhams loan. Can I go to Standard Chartered for 10,000? They will not give me. So I can go to challenger bank. So challenger banks are competing with the big banks. They are quicker and fewer products. Basically online, no heavy infrastructure. They use digital platforms and focus on mobile banking.
Like
Challenger
now.
banks. Huh?
Cash now.
Yes, cash now. What about YO Bank?
YO Bank,
Right?
yes.
That also can be a challenger bank. Here, they can accept deposits. So whenever there is a challenge, so challenger bank and any commercial bank, any traditional bank, they can accept deposits. Right, sir? P2P, also called social lending. The borrowers and investors are listed or registered. What does it mean? Let's see. That's your P2P. Right? Now, these are, let's say, lenders and borrowers. Clear? I want money. I will go to bank, right? Bank can say, no, you are not creditworthy. Your score is not good. We cannot give you finance, right? So I can approach P2P. So P2P is just a liaising body, liaising company. So I can register my profile with the P2P. Now let's say Ritu, she has got enough money. She is going to bank pays only 2% interest on deposits. So she can approach to P2P and she can register her profile with P2P. So lenders and borrowers, they can speak to each other. They can view their profiles, right? So they can talk to each other. Now let's say borrower needs 2 million dirhams. Ritu says, I'm okay, I can give you, but I need 5%.
Interest.
And borrower says, I can give only 4%. So the interest percentage are automatically assessed by the software. Based on the profile, how much interest you can get, how much interest borrower has to pay, all are automatically calculated. So borrower and lender, they can have an agreement. That's called P2P arrangement. So P2P company, they are not involved in borrowing and lending. They just make the borrowers and lenders meet each other. Clear? That's called P2P. I want a job. I will go to LinkedIn, register my profile. There are also employers looking at profile. So me and employer, we can talk to each other. So LinkedIn can be example of P2P, right? So let's understand the concept. Borrowers get low rates. So bank is charging me 5%. I am a borrower. I can get at 4%. Savers, the lenders, the investors, they can get higher because accepting greater risk. Now Ritu was depositing money in bank. She was getting 2%. So she can get here 4%. Why? Because she's taking more risk. Available rates.
Borrowers will get higher rate now because it's a high risk.
Sir, who is borrower? Who needs money? So he will get lower rate. As compared to the bank, he will get lower rate.
In UAE, can you give me some example for P2P company? Because in India, I know like Faircent and all those are doing that platform. But in UAE, any P2P company like those are in this business?
Let me Google it out. Okay. That's okay. Good question. It's obvious. I will see if I can put some names, okay?
Sure.
Yeah. So the investors, they get higher and the borrowers, they get slightly lower. Okay. Available rates means the interest rates varying depending upon the type of borrower that the P2P site lends to and the risk of the lender and the risk the lender is prepared to accept. So how much interest the borrower will pay, how much interest the lender will get, all are assessed by the systems, the computers. They make profit. The P2P, neither they lend nor they borrow. What do? They just unite the borrowers and lenders. So they make some kind of fees they charge. They make profit via fee against banks which make profit via spread. So what is spread? The bank is lending and borrowing, right? So bank is lending, let's say at 2% and borrowing at 1%. The spread is 1%. So bank is making money as the difference between interest income and interest expenditure. That's called spread. But P2P is making profit on some fees. They charge some fees on the dealing, right? So basically P2P income is not interest income. That's fee income. But bank getting interest income. Yes, please.
They charge with the borrower or they charge with the lenders?
Look, of course, they will charge both. The borrower was rejected by the bank. He got the loan here. Of course, he should pay something. There should be some mechanism how to pay, right? It's not free. Clear or not?
Yes,
the deposit is lent out to individuals and businesses. It means what? So P2P company can be also, I mean to say, the lender and borrower, not only individuals, also can be business houses, companies. No interest is paid while deposit is waiting to be lent out. For example, let's say Ritu, she has got 5 million dirhams to invest, to lend, and I am the borrower. We spoke to each other, right? We can see our profiles, each other, we can discuss. Now, tomorrow she can say, no, sorry, I don't have money, right? So to lend, you should show money. You should deposit in the escrow account, right? You should show some seriousness. You have money or not. After all those deals, you say, I don't have money. That's not allowed. So the money has to be put in the escrow account. No interest is paid while deposit is waiting to be lent out. For the 5 million dirhams she has put in the escrow account until a borrower is found, so that money will get no interest. Interest rates are calculated by automated credit appraisal system. So how much borrower will have to pay, how much lender can get, those interest rates are calculated automatically by the appraisal system. Clear or not? Well,
What is
it's also
escrow
a
account?
company. Yes, please.
What is escrow account?
Yeah, can someone tell me what is escrow account? Is a
It's a
special account,
temporary account.
temporary
The
account
bank play the
designated for a
mediator role.
particular purpose.
Yeah,
Right?
it's
Let's say,
dummy account, we can say dummy account
right.
maybe.
Yes. Let's say you want to buy some property.
Yeah.
Right? You are paying 500,000 to MR. That money will be in the escrow account.
That we need
Right.
to open with the banks.
Of course, yes, with the banks only.
The bank will open for us, right? It would be the mutual
Yes.
account between
Yes.
two.
Bank will open for you and you have to show that you have money to be lent. Not that after all the negotiations and agreements, you say, I have no money. That's not possible.
It is mostly happening in the acquiring and acquisition banks, the companies, acquiring companies, and
What is it again?
the
Yeah,
escrow.
correct.
The bank,
Correct.
bank will play a media role, okay, and to create a escrow, okay, between the mergers and
Same thing.
acquisitions.
Yes,
So they will charge also.
when mergers are happening, I want to buy your company, right? After all negotiations, I can say, sorry, I have no money, right? So buyer has to show he has money. Similarly, the investors, the lender in P2P, he has to show that he has money. That's what. And while the money is lying idle, not lent, she does not get interest. Interest can come only once money is lent out.
A
Clear?
trusted third party.
Yes.
Hello, sir.
Any more question? Huh.
So once the deal is finalized, then borrower can take money from this escrow account. Is that correct?
And
Okay.
then only can he pay interest. Yes.
Okay. Okay, sir.
And P2P also cannot accept deposits. Clear? Now coming shadow banking. Shadow banking provides services similar to traditional banks outside banking regulations. As the name says, shadow banking, right? They are not completely controlled by central banks. Shadow banking ranges from pawnbroker, finance company, money market fund, and specialized investment services. What is pawnbroker? Have you heard about pawnbroker?
Yes.
What is it?
So if you have something valuable, you just go there and put
Right. In your village, there are rich persons, wealthy persons, right? You can go to them, give your necklace, and they can give you some money.
Yes.
That's called pawnbroker. An individual or business with a pawn shop or pawn shop offering secured loans to the people with items of personal property used as collaterals. A pawn is another term called collateral loan.
Yes.
Like Muthoot
Mainly in
Finance.
tax havens,
Manipur.
low tax. What is tax haven? Low tax or low transparency, right? Bermuda Island, Cayman Island, Singapore, example, right? Maldives, those are called tax havens, which are offshore countries, right?
Why
Either
it's
there
called
is,
low transparency?
who can tell me, right? Why we say low transparency? Because, see, you must be opening accounts for your customers in with offshore account, right? So you are opening account for customers in other countries. Why? That is low transparency. It means what? How much money you have there, they will not tell UAE government, right?
They
That is
don't
low
share their data,
transparency.
is it because
They
of
don't
that?
share data. Yes.
Ah, okay.
All right.
So that means they will not come under FATCA and all. Those countries?
Basically, yes, they will not come under FATCA. Correct.
But currently
Especially
only
Jersey,
Switzerland bank.
Jersey and all, they don't share their data, especially like any other
Yes.
country.
So those countries are called tax havens, right? You want to
Yes.
hide your money there for your benefit,
Yeah.
right? You want to pay tax. So they also cannot accept deposits. So challenger banks, they can accept deposits. P2P cannot. Shadow banking cannot. Pawnbroker cannot.
It doesn't come under.
No, basically, see, pawnbroker can be individual, also can be business, right? Means companies. So what do? They take your personal property and they give you loans. In your village also, if you go to someone, maybe there are some people who are lending money, you can give your some utensil or some maybe some valuable item. You can get some money. That's the concept.
Mostly I
Collateral. Gold. Okay, you can say. Let's say. Can I say? Let's say Muthoot Finance. Can I say? In India, Muthoot Finance. Pawnbroker. Right? So they take your gold. You say gold loan, right? That's called your pawnbroker.
But they accept deposits. In Muthoot Finance, you can do FD also.
Possibly they would have taken some banking license.
Loan against asset.
I don't think they take deposits.
But offshore account takes.
No,
Yes, sir, they
not
accept
taking
deposits.
deposit.
We don't mix up here.
They are
They're
not
giving
taking
accept
higher rate of
deposit.
interest.
Okay, possible. Okay, so this page, any question on this?
It's clear.
We will get. Bespoke services. A bespoke service is a tailor-made solution designed to fit one client's exact needs rather than offering them something pre-packaged. Right? No ready-made product. Ready-made product is for everyone. Right? For a high net worth client, bespoke client, the product has to be as per his requirement. Right? We say the products are designed to fit his requirements. Wealth management, estate planning, tax planning, insurance, lending, and lines of credit, these all are also given to. Mute your mic, please.
Bespoke.
Right. Investment banks. Someone's mute is open. Can you? Okay. Different from deposit taking commercial banks. So investment banks are not same like FAB or ENBD, right? What services they provide? Finance raising, advisory on new issues, takeover and mergers, treasury dealing, investment management, securities trading, providing advice to and arrange finance for companies. They also help your company float on the stock market. Means they can help you bring IPO. Banking for governments, institutions and companies. They can either be a subdivision of a bank or separate company within the group. Investment, portfolio management, wealth management, these all are the services provided by investment banks. So basically, you can say they also cannot accept deposits, right? So what they cannot do? They cannot do proprietary trading, servicing hedge funds, and making private equity funds. We have to memorize. What is called proprietary trading? Trading in stocks, bonds, currencies, commodities, and derivatives or other instruments with their own money, not allowed. So basically, investment bank cannot have their own portfolio. Clear? They can manage clients' money, but they cannot invest their own money. That's called proprietary trading. Servicing hedge funds. They also cannot service to hedge funds. We'll see in chapter 3. They also cannot make private equity funds. Means they cannot invest in private equity.
Like
Pension.
insurance companies? Sorry, sir. It's like insurance companies?
Which one?
This investment bank.
No. Can someone tell me some investment banks' names?
JP Morgan.
JP Morgan shares, right? Investment bank. They're not insurance companies. Huh? Right.
Morgan
They're not
Stanley.
insurance companies. right? So we have to memorize what
Is it India
services.
Bank also?
Which one?
Indian Bulls?
India Bulls. Possibly they have, maybe they were having this services, I'm not sure. Right? So we have to memorize what they provide and what they do not provide. Okay? Fund managers. Fund managers, also called asset managers, also called investment managers. What do? They manage portfolio for different types of clients. Different types of fund managers can be institutional fund managers, retail fund managers, and private client fund managers. It means what? So you can be a fund manager, right? So you can be managing my money. So I am a retail client. So you are called retail fund manager. You can be a fund manager of a mutual fund. We can say mutual fund manager. You can be also managing the money of a big corporate companies. You are called institutional fund managers, right? Okay. So three types of fund managers. What are they? One is institutional fund manager, managing institutions like insurance companies fund, pension companies funds, etc. Right? Insurance companies, they also have a big portfolio. Right? The money they collect from premium, what do? They invest. So you can also be managing their portfolio. You are called institutional fund managers. Mutual fund managers. Those fund managers operating mutual funds available to the general public to invest, often relatively low initial investment amount. So basically, this is your mutual fund, right? So you can put, let's say, $10,000. You can put, and what you get? You get units. Yes or no? So
Yes.
this fund, let's say 20 million. So they can have a portfolio, right? This is called mutual fund. We'll discuss in chapter number 4. Okay. So who are called institutional investors? Investors which are called big guys, we say elephants, means having huge amount to invest, we say elephants. Big guys means on the block, they dominate the market because of size, money, and influence compared to individual investors called retail investors. What does it mean?
IBTR platform
In
and all
MR
those.
company, let's say FAB or MR company, I can have 1 million shares. I cannot have 10 million shares, right? If I have 10 million shares and MR company total share capital maybe 100 million, and I am having 30%, 30 million shares, I am called elephant. So I can influence the stock price, right? If tomorrow I sell all my 30 million shares, the stock price will go down. That's called influence, right? No, these investors, these are the investors, right? But you can manage their funds. So you are called
Institution.
right? So when you
Institutional
manage,
fund
when your client is a big company, you are called institutional fund manager, right? When your client is a private client, retail client, you are called retail fund manager, right? When you are managing the mutual fund, you are called mutual fund manager. Clear? Right. Next coming cost.
I have a question.
Yeah, go ahead.
It seems I saw you missed pension funds ahead. just before fund this one.
Okay. What is pension fund?
Retirement fund,
Employee contribute the funds.
So whatever pension contributions are going, they are getting accumulated. We say pension fund, right? And that pension fund amount is invested. So you can be also managing that fund. You are called pension fund manager, right? Let's say HSBC is a global bank. They have pension plans. They have millions of employees worldwide. So all those pension contribution, that pension contribution does not get deposited in the bank. That's a pension fund department, pension department. These 20 million dirhams collected from the pension fund, pension contributions are invested. That's called pension fund, right? So you can be managing the pension fund. You are called pension fund manager. Clear, sir? We'll discuss in chapter 8. Okay. This chapter is just overall idea about all the chapters.
So in exam, questions will not come from this chapter?
Of course, yes. 4 questions will come. 4 questions. All right. Let's understand. We are discussing what? We are discussing participants engaged in financial services sector. All those participants are providing financial services in one form or other, right? Custodians, also called custodian banks. Banks also can be custodians. So custodian is a company, and what do? The main services: safe custody, looking after securities on behalf of fund managers, pension funds, and insurance companies. What does it mean? Bank is your custodian of your money, can I say? Similarly, your electronic assets, your investments, shares and bonds, where are they? They are with custodian, right? So custodian is the record keeper of your holdings, of your portfolio. Your shares, your bonds, all are with custodian.
Like relationship manager?
No, it says it's not relations manager. It's a company. It's a company. Okay, let's say now DFM is an exchange, right? Then that is your broker. Yes. Then that is client. Yes. There is also CD, right? And also your bank. There are 5 parties involved. This CD, now you are asking the orders. You are placing orders to the broker, and broker sending to the market.
Okay.
And CD is holding your record. How many shares you have, how many bonds you have, which are the companies have you invested. All those records are available with CD. That's called safe custody.
Depository.
Yes, depository. You can say, let's say depository. Same thing to in easy way, right? So they look after securities on behalf of fund managers, pension funds or insurance companies. They arrange settlement, DVP, delivery versus payment. What does it mean? If you buy the stock, money has to go. If you sell, money will come and shares will go, right? That's called exchange of delivery and payment, right? And that is done by CD. Here broker, you are a client, here exchange. Who will make settlement? The settlement is done by CD. DFM is just a platform. It's just a trading platform. But CD is doing all those transaction, settlement, matching. Clear? Asset servicing, collecting dividends and interest payment. Suppose tomorrow let's say FAB declaring dividend 1 dirham per share, for example, and FAB has 100 million shares. FAB share capital consisting of, for example, 100 million shares, right? And 1 share, 1 dirham dividend. So 100 million dirhams FAB will send to CD, right? CD has all the records of the owners of FAB. CD will send money to them. That's called asset servicing. Suppose MR company. MR company has issued bonds. Bonds will pay interest. So the total interest will be paid by MR to CD and CD will distribute. That's called asset servicing. Got it or not? Other services providing information about the companies. Suppose in your portfolio, you have MR shares, DIB shares, ENBD shares. So they will also tell you some news about those companies. Managing cash transactions means what? The settlement, the trade comparison and matching, but not with counterparty. Understand the concept. So basically, here, broker, right? Now here, buyer, and here, seller. Now here, CD, right? Let's say here, DFM exchange. This CD will get details from the exchange, and here there is bank. So CD will pay to bank or will get from bank. So CD is a settlement company. They are doing settlement and matching. Trade matching means what? Whether the transactions are proper or not, that's called trade matching. So CD is getting information from the exchange. CD is not talking to the buyer. No, sorry, not that one. The CD is not talking to buyer. CD not talking to seller. And seller and buyer are called counterparties. Clear? And exchange is called centralized counterparty. Right? If you are selling the shares, who is paying you money? Not broker. Money coming from the CD, from the market, exchange. But exchange has appointed CD to do all those transactions. Exchange said, take all the records, how the trades are there, match them, reconcile them, and pay them, settle them, and keep the records. That's the job of the CD. So basically, CD is getting data from where? From the exchange. CD is not going to talk who is the buyer, who is the seller. No. CD is not contacting the counterparties. CD is getting data from the exchange. Clear or not? They also perform foreign exchange transactions. You want to buy some dollars and all, you can also go to them. They provide regular reporting on the performance of the portfolio. It means what? You have 100,000 MR, FAB, ENBD. So how is your portfolio doing? You can get a report from them. Stock lending and borrowing. So CD also does stock lending, but these are other services. Let me highlight. These are main services and other services. So these are your, you can say, primary activities. These are all ancillary other services. Question can come. And what is stock lending and borrowing? What is stock lending?
Pledge.
See, sometimes you can sell the shares without you owning them. Right? Let's say put option, short selling. Right? You can sell the shares without you owning them. So when you sold the shares, you committed to sell, you have to deliver. You can take the shares on loan from the CDs. So CDs also do stock lending and borrowing.
Is that
Clear?
CFD, sir? Is that CFD contract for difference?
See, that is done by the brokerage company, not CD. CD is a record keeper.
No,
They are
I'm
not
asking
in
CFD.
CFD is a
Contract for
contract. Which a contract for difference is a contract, derivative contract. So CFD contract is not issued by CD. CD is not involved in options and all. CD is involved in the shares and bonds, the underlying assets. CFD is a derivative contract. Understand? So CD is just mere a record keeper, custodian. They keep custody of your electronic assets. They are not into any business. So what they cannot do? They cannot do trading. They cannot do advising. They cannot do investing. These activities they cannot do. So they cannot issue contracts for difference CFD. Right? CFD is a financial instrument issued by companies. So CD is not involved in that business. CD is mere record keeper. They just want to make sure the transactions have gone as per the provisions. Buyers have to pay, sellers have to get money, right? And keeping the records. These are the jobs of the CD. CD is not involved in issuing any instrument. Clear? Got me?
Yes,
Clear
sir.
or not?
Yes.
Can also come under stock lending in both.
Which one?
This future and option, this kind of trading also comes under.
Yeah, I want to say in chapter 3, we'll discuss about, let's say, options, derivative contracts, which are options, call options and put options. Right. So you can buy put options, right? But in put options, you feel market will crash, right? And you have no shares, but you want to make money from the falling market. You can do advance selling. You have no shares, but you can sell. You can have a contract to sell, right? But when you have to deliver, you can take from them. That's called stock lending. Okay. Wealth management. Wealth management delivers a wide range of services that enables an individual to manage the financial affairs and assets effectively. So effective management of wealth is called wealth management. Provision of financial services, financial planning, assets protection, estate planning, tax planning. Again, we discuss in chapter 3, now chapter 8. Secured lending. So these are coming under wealth management. Financial services, financial planning, assets protection, estate planning, all are coming under wealth management services. Clear? Individual clients, 4 categories. These are individual clients, means natural persons. Mass affluent, over $100,000 investable assets, not net worth, right? Investable assets. High net worth, 1 million. Very high net worth, 5 million. Ultra high net worth, 30 million. You have to memorize. Okay? Financial planning is different from financial advice. How? What is financial planning? Ongoing process, evolving plan of action, taking sensible decision about money that can achieve goals. It is not just about buying the product. So financial planning is not a one-time exercise. Planning is an ongoing process. What is planning? Planning for your retirement, right? That's example. Planning for your insurance products, your pension products, which is financial planning. Financial planning may include selection of investments, investment management, protection product, estate planning, wills, etc. All those we will discuss in chapter number 8. Okay. What is financial advice? One of recommendation at a single point of time, we say financial advice. A financial plan may be simple or very complex. So I came to you, hey, I want to buy some stocks, 1 million stocks of shares of MR. Can you advise me? That's called financial advice. It's called one-off recommendation. Means what? One time, finish. I just came, I asked something, you advised me, finish. That's called one-off exercise, financial advice. Planning is an ongoing process. Financial planning has 6 steps followed by financial planner. Establish client relationship, collect clients' information, analyze clients' financial status, develop solutions, implement and review the client's situation. These are the step-by-step approaches to financial planning. We have to memorize. Again, we discussed in chapter number 7. What is Financial Planning Standard Board, FPSB? A non-profit company managing, developing and operating certification, education and related programs for financial planning organizations. Its professional qualifications, Certified Financial Planner CAP, is used globally, including by CISI. So basically, FPSB is a financial planning standard board. So they are getting all those guidelines. All those guidelines have been developed by Financial Planning Standard Board. Right? You can be a certified financial planner. CISI also offering this certification course. Wealth management providers, financial advisors, commercial banks, wealth managers, private banking, family offices, and private investment offices. Basically, these all are engaged in providing wealth management services. Wealth management may get involved in financial planning, tax planning, investment management, assets protection, estate planning. These all coming under wealth management services. Okay. So first we'll talk about financial advisor. So basically, the financial advisor, what do? They provide financial planning services. How? They look at clients' entire financial process, budgeting, savings, investments, mortgage, tax planning. When providing financial advice, the financial advisory firm may offer independent advice or restricted advice. Once again, we are discussing financial advisor. What do? They provide financial planning service. Right? How? They have to first look at the client's financial affairs, their budget, their savings, their investments. Then only they can make a planning for them. Right? When providing financial advice, financial advisory firms may offer independent advice or restricted advice. Independent means where they select products and solutions from best available in the market. If I go to, let's say, FAB, I want to buy some insurance product, right? FAB can give me only 3-4 choices. They will say we have tie up with Takaful or Adnik or Rock Insurance. So they're having limited product. So that's called restricted advice. But when FAB can give me any product I want, the best from the market, that's called independent advice. So basically, independent advice means the advisor can give you a limited choice, limited product, which is restricted. Independent means any product from the market. That advisor is not restricted. Advisor is under no obligation to give you only limited products. Clear or not? So question could come. So restricted means the products to one or just a few products providers. Typically, they do not manage investment portfolios of the clients. Instead, they select a discretionary fund manager or a series of mutual funds to meet clients' requirements. So financial advisor is not managing your money. He is only organizing. Understand? The wealth manager, he manages your money. But financial advisor, he only recommends, advises, arranges. He does not manage your money. So they do not manage your money. They will provide, they will arrange, they will select some fund manager. Increased competition, cost pressure, and the need to improve services offerings, however, seen many financial advisory firms to change their business to operate more like a wealth manager and manage also assets these days. So basically it says that financial advisors generally, they do not advise, they do not manage your wealth, right? But these days, from cost perspective, they have also started managing your wealth. So financial advisors, their roles, their activities, their services, not only restricted to advising, not only restricted to planning, but also they can manage your portfolio. Clear? Commercial banks, you can read wealth managers. This purely theory chapter, also chapter 2 also theory. So you have to, bear with me. Okay. Commercial banks, stockbrokers, and fund managers, they are providing wealth management services. A stockbroker, apart from providing execution services, what is execution service, sir? What is execution service?
As per the client's
Yes,
instructions.
client says, hey, I want to buy. So broker will do that. That's called execution only. They also manage investment portfolios for clients. Wealth managers manage portfolios either on discretionary basis or advisory basis. Coming here. Now, what is called discretionary asset management? Making decisions on behalf of the client without needing prior approval for each transaction. What does it mean? You are my client. You gave me $2 million. I am going to manage your money, right? If it is discretionary, it means I don't have to call you, sir, can I buy this? Can I sell this? I don't have to call you. So it is up to my discretion. I have got that power to decide. But there are certain conditions, some criteria. There is some terms, conditions agreed between me and you, right? So while I take the decisions, those decisions should be as per the terms, conditions. I should follow certain limits. Clear or not? Advisory managers providing recommendations but leave the decision to the client. That's called non-discretion, also called advisory management. So every time you call the client and tell him, suggest him, recommend him, and he will decide. That's called advisory, also called non-discretionary. Private banking.
Sir,
Yes,
one
please.
question.
Yeah, go ahead.
In the discretionary asset manager, the terms and conditions are the same for for all, or it will be conditioned bank to bank? It is very conditioned bank to bank.
Okay. The conditions means what? Let's say client says, hey, don't invest more than 40% in equity, right? Client says, I want regular income. Shares do not give you regular income, right? So you have to buy foreign bonds. So client's objectives, client's financial status, client's risk profile, right? All those you consider while you manage the portfolio. So as long as you are sticking to the conditions and the criteria, you don't have to call the client, and that's called discretionary. So terms conditions, some conditions are standard conditions and some conditions are specific to the clients. So you have to fulfill the client's requirements and accordingly you take the decisions. Clear or not, sir?
Clear, sir. Clear. Thank you.
Okay. Next. What is private banking? Focusing on wealthier end of market and restricted their services to wealthy or very wealthy clients, which is private banking. So private banking means banking with high net worth clients, right? Wealth advice and management to high net worth individuals. This kind of service is usually offered to high net worth individuals on bespoke basis. What is bespoke? Tailor-made. Right? Fitting to the requirements of the client, not ready-made. Not that anything you can give. No. The product you are advising should be fitting to the purpose of the client. So we said tailor-made. Estate planning, tax planning, all are provided to the private client. We are discussing what? We are discussing participants engaged in financial services sector. Family office also is a participant. Let's understand what the family office, what do they do? Family offices and private investment offices. Family office. Investment advice and management, philanthropic advice, estate planning, tax services, insurance arrangement, household management, succession planning, private school arrangement, services to family-owned business, advising on governance and business management. These are the services provided by family offices. Let's understand, family offices can be single family office and multi-family office. What is single family office? A private company set up and owned by one family, right? So family office is looking after all those services for one family. So who are the members of the family office? The family members, right? So one family, let's say any big person in UAE, example, billions of dirhams, they can create a family office. It's a private company created by the family, one family. Private company set up and owned by one family or family to act as advisory and wealth manager, not necessarily licensed by regulators. So you can be also working in that family office. You know, there are many family offices. So you can work there, managing their family affairs. Clear or not? So family office, when I say single family office, serving only one family. Very broad. Investments, tax planning, estate planning, philanthropy, all those are the services provided by family office. Clear? So family office is a private company set up by the family members, right? So those
Can we
Yeah.
call Al Futem a family office?
Yes, there are many business houses, many family businesses. They also have family office. The billions of dirhams they generate from the business. What do? They also have another in the backyard. There is also one more investment portfolio. So they have created family office. They will employ some people and they will manage family office. Clear, sir? Then coming multi-family office. set up by wealth managers, investment professionals, private bankers, or sometimes by a group of family jointly. So single family office set up by one family, right? Now multi-family office, it is not necessarily by the family members. It can be wealth management companies, even banks also can work as multi-family office. Bank also can provide services to multi-families. That's called multi-family office. So multi-family office set up by wealth managers, investment professionals, private bankers, or sometimes by a group of families, right? Your family, my family, we can have one office. So the cost can be distributed.
Any real
Same
example on the multi-family office?
Yeah, actually, this two banks merging.
Two banks merging.
Yes.
If two banks merging, that become one.
Yeah, that is two families.
No, what I want to say, let's say ADCB, right?
Yeah.
ADCB also can manage some families' investments, right? In Abu Dhabi or in Dubai, there are very big people having billions of dollars, billions of dirhams, right? Their businesses, their portfolios also can be managed by ADCB.
Like
So
Mubadla?
ADCB,
Mubadla and NMC?
yes, Mubadala you can say. Generally, Mubadala is a private equity company. So family office means you are managing the family affairs. Simple. Family investment, their children education, their businesses, their
How
insurance.
about Dubai Holding?
Dubai Holding, it's not a family office. It's a public company actually. It's not a family office. So basically, let's go ahead. So family office means the office, the company which is managing the affairs of more than one family. Simple. And what affairs? Estate planning, tax planning, business management, their children education, which school they will go to, tax planning, all are managed by the family office. Clear or not? Same services, but emphasis on wealth advice, investment management, and planning. What it says? Let's say ADCB. ADCB is not going to be involved in their family school education, right? But single family office can involve in education, school education and all. But multi-family office, they don't look into so much in petty matters, right? So multi-family office servicing multi-families and generally investment management, planning, but not in this school management, right? All those they don't do. Private investment office, independent financial services firm. So PIO is an independent financial services firm. Clear? Structured as a partnership where partners invest their money alongside clients. So private investment office, it is not related to family office. Clear? So we 5 persons, we can create a private investment office, right? We can also manage some clients' money. We can also invest our money together. So clients' money, our money, we can mix together and we can manage some wealth. That's called private investment office. So PIO is a financial services firm. Multiple wealthy clients, but focus on investment only services. They do not focus on tax planning, household, governance, schooling. No, they focus on investment only services, means investment management, right? Investment management and wealth services, they also manage risk, conduct due diligence, prevent fraud, and monitor assets allocation. These are the jobs of the PIO, right? So single office, single family office set up by the family. So family is setting up a private company to look after all the transactions of one family. Then multi-family is not a family owned. It can be also family owned, but generally are bankers and sometimes private bankers and investment firms. Then coming PIO. So PIO does not go in detail. PIO generally focusing on the wealth management. Clear?
Sir, I have one question.
Yeah.
GEMS education will gonna come in which category? Like, let's say if we'll go with the example, it will on the which side?
GEMS education is a school. It is not neither under PIO or nor family office. It's a separate entity.
Group.
Huh?
They can the working group. They can have the single family office, so it can come.
Yes, Bharki. What is his name? Sunil Bharki, right? So he has multiple educational institutions.
Yeah, that's what I said.
He has billions of dirhams. So in the background, in his office, at his home, he can create a company to manage the investments. How much money invested in Dubai branch? How much money invested in Sharjah branch? All those investments
It
are
can
managed by
consider as
family
single
office.
family office. Yeah,
Yes.
it can consider
Right?
as
Yes, single family office, right? Let's say Sunil Bharki Saab and another person, they can also mix together. That's called multi-family office. Clear or not? So multi-family offices provide services to multi-families. But PIO does not give services to families. They can give services to any client.
Algurer.
Algurer also, you can say Algurer family, right? We know Algurer family office, Alfutem family office. See, they have businesses, they have malls and all. But there is also one office, one team looking after all those investments. That team is called family office. Yes or no? Next, philanthropic advisors. We are discussing the participants. Philanthropic advisors are specialists. The services they provide maximize the impact of the charitable giving to navigate how, what, and why of giving to improve charitable outcomes. Clients are wealthy individuals, families, companies, and foundations. So philanthropic advisors, they advise where to donate, how much to donate, the donation should be for whom. All those are advised by philanthropic advisors, right? Portfolio management. Investment management focusing on managing investment. Portfolio management, management of investment portfolio on behalf of a private client or institution with a primary focus on meeting investment objectives. So investment management, the main intention is to meet the objective. What are the objectives of investment? To make money, right? And making money can be in various ways. We say income.
On investment.
I want income. I want regular income. That's my objective. I want capital appreciation, my objective. I want capital protection, my objective. I want maximum growth, my objective. So investment management, the whole purpose is around to meet the objectives of a client. And the client can be retail client. Client can be also an institution. Client also can be a family. Client also can be a pension fund, insurance fund, whatever. Portfolio management services. So under the portfolio management services, execution services, discretionary management services, and also non-discretionary, also called advisory management services. Let me highlight. Right? Let's understand. So what is called execution services? No advice about suitability of the product. Means what? You are a stockbroker. The client called you, I want to buy 10,000 shares of MXNBD. Right? You don't have to bother your head. This share is good for him or not. You don't have to advise.
Just buy or sell.
Just transfer his order to the market. Right? That's called execution only service. No advice given, no recommendations. Only you are carrying out the instructions of the client. Now, discretionary management, client giving discretion to the firm. Firm means you are the portfolio manager. You have got the full right by the client. You can do whatever you want, but do not exceed the limit. As long as you remain with those terms, conditions, you don't have to call the client in midnight. Can I buy? Can I sell? Firm charge changes in portfolio without referring to the client, but in line with the objectives and strategy agreed with the client. So the strategies and objectives are already agreed between you and the client. Non-discretion. Under that, dealing with advice and advisory portfolio management services. Dealing with advice means firms advising on individual transactions. That's called dealing with advice. No responsibility for the overall portfolio. Now, advisory portfolio management service. The firm is responsible for advising on portfolio composition, but the client decides. Sorry. Understand this concept? The firm is responsible for advising on portfolio composition, but the client decides. The question says responsible. The firm is responsible. The firm is obliged on portfolio composition, but the client will decide. A portfolio manager considers changes to the client's portfolio and explains why the changes are necessary. The client then decides whether or not to accept the advice. The client leads investment management. What it says. The client, yeah, there are two things here.
He can take
One
the
is,
decision or he cannot
yeah,
take the decision.
one is non-discretion. Under that, dealing with advice and advisory services. Definitely, when we say advice, it means non-discretion, right? You are advising and the client is deciding. And we say dealing with advice means the firm is advising on individual transaction. Understand? So client came, client asked you, I want to buy this, is it good? That's called advice on individual transaction. Clear? And this execution is different. No advice. Now coming advisory portfolio. The client gave you $10 million, right? And this is under again non-discretion, but it is regular advice, recurring advice. In dealing with advice, one advice on particular transaction. Clear or not? When I say advisory services, means continuous advice. Client gave you money, you are always under your obligation to advise. We have to buy this, we have to sell this. That's a continuous advising. That's called advisory portfolio service. You advise, the client will decide or not, it is up to him. But you are under obligation to continuously advise. Clear? So non-discretion, under that, two things coming. One is dealing with advice, is for one transaction, advice for one transaction. Clear? Second, advisory services means you are advising on the portfolio composition. What is composition? How much shares, how much bond, that's called composition. Anytime you feel there should be some changes, you have to recommend to the client. You are under obligation. You cannot say, oh, client is deciding, why should I advise? No, you are under obligation. You have to advise and the client will decide. Clear? Platforms. Okay. Getting boring? Huh?
Can we take a break?
A break will take some after 5 minutes.
With advice and advisory portfolio management. So you said, so there are two different terms about like in this advisory management. Two different because in this you are saying firm advice on individual transactions.
Right.
Okay. So let's take an example. A firm advises me to buy this a Tesla stock.
Right.
Okay. So no responsibility to the overall.
Of course, yes. Of course, yes.
And with that, the other one, so every morning they give me like I mean not every morning, but yes, they give me a call and they say that. Okay,
so you can say dealing with advice, the client is asking what to do. Example, right? But under the advisor portfolio, you are the portfolio advisor, you are always advising, right? Client not asking. Client was asking under the dealing with advice. Under the portfolio advisory, you have to always recommend. Sir, can you take this? Can you take that? That's called portfolio advisory. You are under obligation. Clear or not?
Yeah.
That's okay. Next, platforms. So platform, they are called online services used by intermediaries. Who are the intermediaries? Brokers, right? Portfolio managers, advisors, they are called intermediaries. So they use online services to view and administer clients' investment portfolio. There are a lot of websites out there. Have you heard about moneycontrol.com in India? equitymaster.com. Those are websites which have all information. You can also create your portfolio. Those prices are automatically changed. That's called platform. They offer a range of tools which allow the advisors to see and analyze the client's portfolio and choose products for them, provide facilities for investment to be bought and sold online at a discounted services. They arrange, not provide, they don't provide, they arrange custodian and they charge for their services. So basically you can say, for example, let's say money control, for example, right? You can see this is of, sorry, don't look at this. Okay, you can all these live prices. You can create portfolio and let's say I want to say, let's say ACC example, right? You go here, all the details are there. I want to click on dividend. You can see all details, right? The price, the dividends and all. That's called platform. So platform basically giving you all the information to take decision. Okay. So they do not provide any advice. They only give you information. It is up to you how to use it. Wealth management and technology, communications, online solutions, and robo advice. Now these days, even your mobile app, digital app, they also give you information. You open the app, you get all the information. So those also are called participants engaged in financial services sector. Communications, what are they? The apps, including digital purchase and sale. So communications, you can say, let's say mobile app, for example. Through that mobile app, you can also buy and sell the stocks. Robo advice. online wealth management service that provides automated algorithm-based portfolio management service. So robo-advice, as the name says, advice. They are advising without use of human financial planners. So it's an online service providing automated algorithm-based portfolio management advice. So robo-advice providing advices, but platform that does not provide advices. They charge monthly or annual fee based on the size of the portfolio, means amount of assets under management. Robo-advice is an application technology to the process of providing advice. Robo-advice providing wealth management advice with use of algorithms. Right? Let me highlight. So algorithm based. Robo-advisors can make, they can make financial transactions on the client's behalf. Robo-advisors can be suitable. Let's question coming here. So who should use, or you can say robo-advisors are for whom? So it can be suitable for a range of investors. Beginners, right? They can go to robo-advice. Who do not have knowledge to make informed decisions. Professionals, they have no time. They can also use robo-advice. Those who do not wish to hire an advisor, but at the same time have a little desire in selecting their own investments. Right? I don't have any knowledge. I can rely on robo-advice. I have knowledge, but I don't have time. I can also use robo-advice. The automated portfolio management solutions not suitable for whom? Investors who prefer human assistance. I need live advisor. Investors who need a more tailored approach, and investors with multiple investment accounts. So for them, robo-advice is not suitable. See, you can see, let's say, if you go to Dubai financial market, you can also download your Dubai DFM app. You see everything there about the company, the prices, you can buy and sell. Robo-advice.
But that is like the other one.
Platform. Platform giving all informations. Platform is giving all informations, right? Not advising you. But robo-advice giving advices. No, possibly they don't give you advice, but there are certain, they can give you buy and sell platform. In the mobile itself, you can buy and sell.
But sir, one thing, some platform they are giving the advices as well.
Robo-advice.
So this is low maximum platforms are giving right now the advices. The customer can choose as per their funds and their how many shares they can buy, they can choose like
Correct.
that.
So that you can say robo-advice without any human intervention. So it's all algorithm based advice. Okay. So robo-advisors must be registered with appropriate authorities subject to same rules as human advisors. So whether robo-advisors or human advisors, they are regulated. The rules, regulations are same applicable to both of them, right? We are going for a break now quickly. Come back in 10 minutes time. We'll do some question answers. Okay, a lot of theory. Let's do some changes, right? So we are going for a break now. It's 7:40. Come back in 7:50, right? 7:50, okay? So after the break, we'll do some question answers, okay? Am I audible or not?
Yeah. Okay, sir.
Yes, sir.
Yes, sir.
Yes.
Okay,
Okay.
well.
Okay, sir.
Don't go, okay? Come back.
Sure, sure.
How do you feel? Oh, okay. Whatever. Aditya. What's your name, sir? Harmeet. Harmeet. Yeah. From Punjab? Yeah. Aditya. I don't get some. Mama. अरे हो गए क्या करे बच्चों है कलम है वेस्ट हो गया वेरी गुड चलो मैं इसको पूछ लो और एक को लगा नहीं मुझे पता है चलिए Yes.
So this CISI, that level 3, that certification, so this works over here only in UAE, or it's like worldwide? Or for example, in future, if I'm in India, I have this certificate. So this helps me to